2023 is looking to be another robust year for landlords in Singapore. Even as more homes come on stream this year, experts say rents will remain on the uptick, albeit at a slower pace.
It will still be a landlord's market, at least in the first half of this year. Overall, we could see that rental rates in 2023 increased by between 15 to even as much as 25% in some areas. A bit less than last year's 30% rate of growth, but we'll still see fairly strong rate of growth.
Rents have been fueled by strong demand from expatriates, local tenants, and a housing shortage due to pandemic-delayed projects. But with around 18,000 private housing units expected to be completed this year, tenants could see more reprieve towards the end of the year.
Taking into consideration the slowing economy, where businesses are likely to be more measured in their hirings, so we do expect rent growth to moderate to perhaps around 5% on an island-wide basis. For 2023, we are already seeing tenant resistance where further rent hike increase is concerned.
Investors seeking to cash in on elevated rental rates will be well placed to think long-term.
If they are thinking of entering the market to buy a private home, for example, for rental purpose, they must bear in mind that rentals will come down. So they should look out for a rental unit that can be attractive to tenants even when there's ample supply around.
RHB Singapore expects subdued growth for Singapore real estate, particularly in the residential space, where prices will remain stable, but transactions will be sluggish.
There are definitely headwinds for the market, the most pertinent one being the interest rates hike, which has resulted in high mortgage cost for almost all of the buyers.
Generally, investors are retreating to the sidelines. So that's where the buyer sentiment is concerned. Now, where the sellers are concerned, generally, if you're talking about the office and residential property market, our sellers, by and large, they have very strong holding power. Most of them are not in a rush to sell, and they are not prepared to sell way below their expectations.
Still, capital will continue to flow into Singapore property, particularly from high net worth individuals, home offices, and boutique investors.
For residential sector, we are expecting prices to post perhaps another 2 to 4% of growth in 2023. Now, for offices, we are expecting some repricing pressure, given that we are likely to see thinner competition.
RHB Singapore has a neutral call on property stocks, citing lack of catalysts for strong upside, even though valuations are cheap.
Our pick in terms of developer stocks is still city developments. I think it is trading at an attractive valuations. From a valuation standpoint, it still is the biggest proxy towards the Singapore market in terms of residential as well as commercial market.
Real estate investment trusts, or REITs, pool money from investors and invest them in income-generating property. But with REITs inversely correlated with rising rates, investors need to be selective.
In the last 21-year history, you never had a worst ever correction in real estate investment trusts as you saw in 2022. Notwithstanding the Asian financial crisis between 2007 to 2009, as well as the COVID pandemic in 2002, which you saw REITs corrected by more than 50%. Last year's correction was 24%.
But where REITs are concerned, experts say deep declines could be followed by sharp turnarounds.
The mean average forecast for this year in terms of peak or ultimate interest rates is at 5.1%. Now, if that level holds, then I think real estate investment trusts would probably bottom out this year. If not, they have already started the bottoming process as of October lows that we saw last year.
GCP Global has singled out REITs under Mapletree, Capital Land, Ascendus, and Fraser Centrepoint among the must-haves in a portfolio.
This is the kind of REITs that we think that because the balance sheet is conservatively managed, they are actually in a position to capture the upside when the REITs actually make a U-turn.
If you are a dividend-based investor, if you want recurring income, you can play a bit more on the REITs. But if you are looking at more from a growth aspect, from an upside potential perspective, then developer stock is the one which you can look at for a medium-term perspective.
Amid the subdued growth in Singapore real estate, experts say the opportunity is ripe for bargain hunting. In the longer run, though, Singapore's property market is likely to be shaped by bigger structural shifts.
I think we are on the cusp of a new renaissance. It's not even a revolution because it represents a new beginning. Family offices bringing something like in the tune of $400 million. So where this money actually finally seats will then drive the various pockets of underperformance in real estate. Like any renaissance, it comes with a boom, but at the end where it finally ends and how long it will last would be you and my best guess. But one thing for sure is that this trend that has been put in place, the dynamism is very much in place that will drive Singapore. So Singapore is going to be more costly to live. But unfortunately, it's all driven by this huge new money.